Well, I'm looking at you and I feel like you want to talk about it. Do you? Okay, well, let's have a conversation about that. I want to talk to you about new LLC low doc business loan for bad or fair credit. How do you get a massive amount the first time you apply? Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I just got words that you want to hear more about new LLC low doc business loan for bad or fair credit. And I want to talk to you about how to get a huge amount the first time you apply. Okay. Now, right off the bat, boss, don't you do anything before checking your FICO score. Oh yeah. If you're looking for a low doc business loan for a new LLC, you want to pay attention to your personal FICO score first. That's just it is logic. Okay. Keep an eye on your FICO. Why? The higher the better, because the lender is trusting you with their money, and this is a low documentation LLC business loan. Okay. But they need to have some kind of guarantees that you will pay them back. So your FICO score is quote unquote a guarantee that you have financial responsibility, or you've had financial responsibility in the past, and that you are in a position where you can pay the loan back. Okay, this is very important. So the higher the better. And low doc means all eyes are on you, on your personal FICO. I want you to get it in your mind and keep it there. Okay, don't you walk around and telling people, hey, listen, I want to apply for a low doc loan, business loan, but you don't just pay attention to your FICO score. Okay, you are telling the lender just to take one or two pieces of paperwork from you, but what are you giving in return? Let's talk about that. Okay, don't you just so do me a favor. You want to check your FICO score right now. You want to go to annualcreditreport.com. You want to go to Credit Karma. You want to sign up with Credit Karma. You want to sign up with NerdWallet. You want to sign up with OneHub. Those are free credit score websites. Okay, they allow you to monitor your credit score. So keep an eye on your FICO score, boss. I'm talking to you. Okay, don't you? Yeah, you. Why are you walking around and not listening to me? I'm talking here about serious stuff, and you're just not listening to me. So your FICO score is important. I don't care what people tell you, your FICO score is important. And when I talk about your FICO score is important, I'm speaking about 5 quintessential elements of your FICO score. What are those? Hey. Your payment history is very important. It accounts for 35% of your FICO score, okay? Your CUR, your credit utilization ratio, account for 30%. Okay? You have your the diversity of your credit, you have new inquiries, okay, and you have the length of your credit history. So those are the 5 elements of your FICO score. So please pay attention. I want you to write it down. Make sure that your FICO score is, decent, at least decent. The second thing I want you to do right now, if you want to get a giant low documentation loan for your new LLC business, and you want to get that as fast as possible, pay attention to your balance sheet, boss. Balance sheet. You know what that is? You probably don't know. Okay, I'm going to break it down for you. See, first of all, when we talk about low documentation loan, it means you need to provide at least some documentation, right? You got to give something. Give me something. Okay? And a balance sheet is important in the process. What is a balance sheet? Well, this is something that accountants just it's a financial report that you have to prepare it, and it has your assets, your business's assets, your liabilities. Obviously, if you have a new LLC business, you ain't got no time to actually accumulate wealth, accumulate assets and liabilities, right? So everything you do has to be projected. Obviously, when you start a business, you're going to have to inject some cash into the business, and that will be your own cash, right? Or if you're lucky enough to apply successfully for a regular loan and they approved it, that's fine. So you need to show your assets. You need to show your liabilities. What are your assets? Things you own, boss. Things you own, things your business owns. Okay, I'm talking about office supplies to inventory to talk to me. Yeah. What else? Equipment. Yeah. What else? Long-term assets. If you're lucky to have a car, a business card. Okay. What else? So this is what it is. You have short-term assets and long-term assets. When we talk about short-term assets, we're speaking about what? Equipment. We're talking about not equipment. We're talking about assets that you can monetize within a year. I'm speaking about accounts receivable. I'm talking about your inventory. Okay. And long-term assets are assets you can monetize in a period that goes above 1 year. Okay. I'm just giving you accounting 101 so you have a clear idea of what we're talking about. So when we talk about a balance sheet, you have the counterpart of assets, that's liabilities. Okay. So a liabilities just represent your debt, short-term debt, long-term debt. And the difference between your liabilities and assets, in other words, when you subtract your liabilities from your assets, hopefully you have a positive net worth. But in the business context, we don't use the word net worth. We talk about owner's equity. Okay, so that's your owner's equity. And so you got to constantly think about short-term assets versus long-term assets. You got to think about short-term liabilities versus long-term liabilities. But systematically, boss, I want you to think about your balance sheet. If you are applying for a new LLC, low doc business loan for bad or fair credit, and you want to get a high amount right off the bat, you want to pay attention to your balance sheet. The third thing I want you to care about, boss, because I'm talking to you, liquidity. You know what that is? I'm not talking about water here, okay? People are talking about liquid, being water. No. I'm talking about that paper, okay? The ka-ching, all right? So you need to demonstrate liquidity to the lender. I don't care how you do it, but you got to show it, okay? Now, the thing here is that there is actually a very important financial report that talks about liquidity, and that's called the cash flow statement. Again, if you are a new LLC business, what do? How you play the game? Talk to me, boss. How do you play the game? Because you ain't got no actual cash flows, right? So you got to prepare, again, a projected financial statement. So you need to prepare a projected balance sheet. You need to prepare a projected cash flow statement. Yeah, that's how they call the financial report that actually covers liquidity, okay? And the cool thing is that when you have a cash flow statement, okay, you actually have 3 categories where we believe you can shine. Again, you want to prepare forecasts, but you want those forecasts and those projections to be realistic, right? It's not about just dazzling the lender with crazy numbers that you can't back up. What's up with that? We see this all the time. People are like, yeah, I plan for the first year to generate $1 million. Boy, you're not even able to generate 10 grand and you were talking about 1 million? Come on, be realistic. So when you look at the cash flow statements, you have 3 categories, boss, and I want you to keep it in your mind. You have the cash flows from operating activities. You have the cash flows from investing activities. And you have the cash flows from financing activities. Let me repeat that. I want you to write it down. Yeah, write it down. Cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. Those are the 3 categories that should be in a properly presented cash flow statements, okay? And one thing that you want to pay attention to, because the lender is going to pay attention to that, you want to pay attention to the net cash at year end versus at the beginning. Again, everything I'm saying here is projected because you are a new LLC business. You ain't got no time to actually have actual data. I mean, when we talk about new LLC, maybe you have 3 months, you have 6 months, or you have even 1 year. So if you have actual data, you can also show actual data. But if you don't have actual data, please present and prepare and present forecasted, projected data. Very important, okay? And the lender is going to look at your cash flow trends, your projected cash flow trends over 3 months, over 6 months, over 12 months. So they look at a lot of months, if you will, okay? And some people even prepare cash flow projections for 2, 3, 4, 5 years. Oh yeah. I want you to think also about loan proceeds, boss. I'm talking to you, uncle. I'm talking to your grandfather, grandmother, father, mother. aunt, uncle. I'm talking to y'all here, and I want you to really pay attention to the loan proceeds. Okay, if you're looking for a low documentation business loan for your new LLC, you need to explain what you're going to use the loan for. Okay, it's kind of funny. People ask about, oh, explain the use of loan proceeds. Well, that ain't none of your business. You sure bet it is. Yeah, because there is a federal regulation that actually obligates, that mandates that lenders, okay, they need to document how the funds they're given to people and businesses, how that fund is used. So it's not about your business, it is their business too. Because what if you use the cash to engage in illegal activities? Okay, what if you use the cash to engage in to invest in an industry that is quote unquote not within the guidelines of the lender? Because a lot of lenders don't want to finance certain industries, aka adults and marijuana, for example. Okay, not every lender is comfortable with that. I'm not making any judgment. What I'm just saying to you is that some lenders are not interested in that. So you want to really explain what you are going to use the loan for. Are you going to use the loan for inventory? Are you going to use the money for operations, just basic operations? You want to use the money for payroll? Payroll is important when you are a new LLC business. Unless you are a single member LLC, you're fine. But if you are a multi-member LLC and you are thinking about employing personnel, then you need to think about payroll. Okay, so you can use the cash for payroll. You can use the cash for logistics improvement. So everything about shipping, if you're selling a physical products, okay, and you need to ship things from point A to point B, it's kind of cool to have some cash. Okay, you can use the money also for expansion. Okay, you are a new LLC and you just started, but you just realized that, hey, the market is even bigger and there are more opportunities for you than you ever thought you could grab. So you need money, you need some ka-ching to expand. So a low doc business loan could help you do that. And you explain this to the lender. Okay, you can use the cash also for equipment financing. You can use the cash for office equipment. There's a lot of things, boss. I'm just, hey. There's a lot of things you can use a low doc business LLC business loan for. A lot of things. I want you to pay attention to lenders, okay? Because there is a special category of lenders who will appeal to you. Forget about traditional banks. Forget about credit unions. If you're looking for a low doc business loan, those are not the places to go, okay? They might lend you, but they want documentation. So you want to pay attention to a few categories of lenders. You have alternative lenders and online lenders. I'll talk about that later on. But specifically, you want to look for lenders who are specialized in your industry. So if you are, let's say you are in online, in e-commerce, you want to look for a lender or lenders who actually have an understanding of e-commerce. Okay, so they must have loaned to other businesses in the same sector in the past. Okay, that's the first thing. That's the first criterion you want to pay attention to. The second criterion you want to pay attention to is the APR. Make sure the APR is attractive. Normally, and let me just break it down to you. Maybe this is not a good news you want to hear, but it is what it is. When we talk about low doc business loans in general, the APR is kind of high. So don't you fool yourself thinking you might get like 8% or 6%. Those are APRs you hear at credit unions. Okay, if you enter the whole turf of alternative lenders and online lenders, their APRs are high. Okay, but again, you get the cash fast. They have less strict requirements. So it is a win-win game. I mean, they probably they want to finance your operation, your new business, and in return they ask for a high APR. Okay, you want a lender who has flexible conditions. This is very important. I mean, you also want to seek systematically a lender who is okay with low documentation, or even better, no documentation. Okay, so they just approve your ass based on your financial situation, based on your bank statements, but nothing else. And so I was talking to you earlier about alternative lenders. Okay, so those are great players. You want to count Smart Base, for example. You want to count Lend You. All those lenders, we have reviewed them on this show, before, so you can actually go in YouTube and just type those names, those keywords, and you'll see videos that actually cover those companies. So you are talking about Kalamata Capital Group. You are talking about Balboa Capital. Okay, so those are players who actually specialize in low doc business loans for new LLCs. Now, if you want us to actually dig a little deeper, just put in the comment below. Just let us know what your thoughts are, what your questions are, and we'll just cover it. Okay, I will just be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. I am still having a conversation with you about new LLC low doc business loan for a fair or bad credit. How do you get approved for a large amount right away? Large, really, really huge amount. I'm talking 6 digits here, okay? Now, we want to talk about projections, and this is important. Obviously, before I was talking to you about projected data on your balance sheet and on your statement of cash flows. Now I want to dig a little deeper into projections in general. What do we mean by forecasting? What do we mean by projection your data? Well, the thing you have to understand is that you have 2 things that are against you in this process. 2 things. First of all, you have a new LLC business, right? You just kind of new. You're a new kid on the block. Nobody knows you. You are a newbie. Okay, that's the first thing that goes against you. Goes against you, like quote unquote, though. Okay. The second thing is you are asking the lender to give you a low documentation business loan. So you basically are you're asking the lender a lot of stuff. So my question is, what are you giving him or her in return? I'm talking about the lender here. Well, you want to get solid projections. Make sure that your projections are realistic. Okay. The reason why they want to have projections is that you want to show that your new LLC business is viable. Okay, it's not just some kind of business that's going to vanish after 3 months or 6 months. Okay, we know that the stats are not really in favor of new businesses. They close shop after 1 or 2 years in huge proportions. So the lender wants to make sure that you are here to stay for a long time. So prepare projections that are solid, that actually show that your business is viable. Use industry benchmarks. Oh yeah, boss. Yeah, you know what those are? Let's say you are in e-commerce. You want to base your projections on independently verifiable data. Okay, research from consulting companies, research from third parties and whatnot. Okay, and remember that when we talk about projections, all 4 financial statements are to be projected. Earlier, I talked to you about the balance sheet and your cash flow statements, but there is a 3rd and 4th financial statements where you're talking about your statement of owner's equity, and the most important of all also is your income statements. Okay, your P&L. Okay, so this is important. You want to focus on sales projections, boss. Because do you hear that? Sales projection. Okay, don't forget important assumptions underlying projections. In other words, there's something called disclosures, or there's something called accompanying data to your financial statements. This is where you actually explain the basis of your projections. You explain your assumptions. If you make some critical assumptions for using some data in your projection, you want to basically explain that to the lender. The last thing I want you to pay attention to when you want to have a new LLC low doc business loan for fair or bad credit is a business plan. Yeah. Oh yeah. And I've said this before. When we talk about business plan, I'm talking about a solid business plan. And please, don't you go on the internet, and I keep saying this, and download a cheap ass business loan template, a business plan template, and try to, save it on your computer and just customize it, put numbers here and there, and try to and expect to razzle dazzle the lender into believing that you have a viable business. It doesn't work. Okay, boss, sister, brother, I'm talking to you. If you cannot spend $200 to get a solid business plan, if you are applying for a $100,000 business loan, then it ain't worth it. Seriously. It's just not possible. You need to invest. And if you are not willing to invest $200, $150, $100 to get a solid business plan, I want you to get your cheap ass out of here because you ain't serious. Yeah, sorry to tell you, but I'm just saying it as it is. Country logic, boss. Either you like it or you don't like it. Don't get mad. Get better. Don't get mad. Get smarter. Don't get mad. Get prepared. Okay? You need to actually outsource the whole thing if writing business literature is not your forte. Outsource it. You can hire a local business plan writer. You can go on online platforms as diverse as Fiverr, as diverse as Upwork, as diverse as freelancer.com. You have TopTal. You have there's a lot of freelancer websites out there, and it's all about just outsourcing the whole thing. You can actually get a solid business plan for $200, $300. Okay, it is a worthwhile investment. And if you don't want to outsource your data to others, your work to others, just buy or subscribe to business plan software. They charge you about $20 a month or $19 a month. Okay, you have Enloop, you have Live Plan, you have another one too. I'm just blanking right now, but Enloop is a good one. Live Plan is a good one. You have Biz Plans, okay, also a good one. So you can probably just get a good business plan, okay. And again, summarize in your business plan what your business is about, because the whole thing is you need to convince the lender that you are a viable business. In addition to the business plan, you need to have a 1 or 2 page pitch where you kind of like do a recap of your business, and most importantly, how are you going to monetize your business model? How are you going to generate revenue? Okay, those are important. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just having a fireside. A fireside chat with you about new LLC low doc business loan for bad or fair credit. How do you get a massive and that's a very high amount right off the bat? So think about your FICO score. Number 2, your balance sheet. Number 3, your liquidity. Number 4, loan proceeds. Explaining. Number 5, you want to seek a specific niche of lenders. Number 6, your projections. And number 7, think about having a business plan. Thank you so much, boss, for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.